Today we are talking charts and technical analysis of gold and silver, and I'm going to be joined by Patrick Karim of North Star Bad Charts. This is Dave Russell of GoldCore TV, helping you make sense of the precious metals markets so you can make better investment decisions. Patrick, welcome back to GoldCore TV.
Dave, Happy New Year. Thanks for having me on there. So it's a great way to start the year there, being on your show.
Indeed it is. Indeed it is. Thanks, and it's great to have you on today as well. Now, if we talk gold and silver, there's been a lot going on in precious metals over the last while, in the last couple of months, and we're seeing some strong moves in both gold and silver. What are the charts suggesting for you?
Well, there was a rally. I don't know if I could show my chart there while I
Please
tried
do.
to explain this and people could try to absorb some of my charts. Let me just share the screen. Okay. Now, this is a chart I did super recently. It's a quarterly chart. So quarterly candle closes for the silver future charts. So quarterly candle, that means in one of these candles, guys, there's 3 months of data. So it really removes all the noise. These wicks here on top, it's noise from the month, from the week, from the daily. So it really gives you a clear picture. And this black line here is the 9-year moving average. So whenever the price is above the 9-year moving average, you have the potential of going up higher. If the price is below the 9-year moving average and it's sloping downwards, then you're at risk. You know, the momentum's on your favor. You need to base. You could drop. But after this explosion in 2020, in July of 2020, this candle here, this quarter here, Q2, silver has been consolidating. That's what it's been doing above the 9-year moving average for the past 2 years. Like, it's more than 2 years now, right? 2 years and a half almost. And it did a perfect bounce. And you see these small wicks here. So that's noise on the smart time frames below, really scaring you. And if I bring your attention to the right, this is the volume. So this is the volume for that price. So all this, it creates a huge volume defined base. So a lot of buyers, a lot of people who bought at the top here, they sold in this base. New people bought here, they thought it was cheap. But then as soon as the price is able to detach itself from a huge volume defined base, it's going to try to seek a new home, a new fair value, just like it did here back in this huge base during the 90s, 2000s. We had a huge volume defined base. And then once it was able to detach, it went up, up, up until it found this new base here. So the previous base was $5, $6, $7 silver. Now we have a new base in between 13, 15, 17, $20. Look, we just bounced. Right now it was a bounce. And we're clearly, there's a beautiful breakout line here on this quarterly candle close. If March, we could have a convincing close above this descending trend line on March 31st. Is there 31 days in March? I think so, right?
There is indeed, yes.
We've closed above that convincingly. Silver is going to enact a fast move all the way back to all-time highs. There's going to be a congestion here area at $28. So that'll be the next step. But seriously, if it closes above, on a quarterly close above this descending trend line, which is now probably $26 or something like that, we have to look up, up, up. You're above the 9-year moving average. You'll be above this critical resistance, and above 29, you're above this critical wall, this historical wall. On the quarterly close, back in the 80s, even if people say, oh, I went up to 50, on a quarterly close, it never got above 29. So people got to stop thinking, oh, silver's not back at all-time highs. It didn't spend a long time there. It's not very meaningful. So even 28, 29 is a stretch. Here in the 2010 top, it spent many quarters above it. But and that once you break down below that, that support becomes resistance. So this is critical. Step one.
So you're saying, sorry, I was going to say, so you're saying that if we do see the quarterly close by that, you're pretty bullish for the year.
Ah, Jesus, for the decade, for the next 8 years.
Right.
It's like, what else you want, guys? We'll be above and inclining. It's just turning up here, the 9-year moving average. See how it's turning up? This is 9-year moving average. These are capital flows. And then we have the SPX breaking down versus producer price index. SPX is very close to breaking down versus gold. The NASDAQ broke down versus silver. NASDAQ broke down versus gold. All these, the basic materials sector in the SPX is breaking out. There's a whole bunch of clues, guys, piling up. So look, I know a lot of people here, they wanted me to call the bottom here. Even if you do call the bottom, you'll only know in hindsight. And from a risk reward perspective, it's never good trying to, I know some people love getting in here at $17, $18, but as a chart trader, a beautiful breakout line like that, Dave, it's the equivalent of the breakout candle we had back in July of 2020. It's the equivalent. It's more, I'll say it's more the equivalent of the breakout candle we had back in 2003. So after the US equities started breaking down in the dot-com bubble, after a year, when the US equities kept going down, silver started outperforming. So we're more at this type of situation right here where this is a once in 20-year signal. And before that, that signal we had was back in 70, 71. So we're right there, man. This line, if it breaks above, uber bullish. I know some people talk like I always say to the moon, but only after these important breakout lines are breached, and we're right there, right there, Dave.
So you had an interesting survey on your Twitter today. You were asking the question whether we're seeing a bull market rally or whether this is a bear market pullback. How did the answers to that? How did the survey results come out on that one? And what's your thoughts on that?
After a few hours, you see there's like 1,000 votes, and a lot of people think it's a bull market correction. And still surprising, 30%, 32% think it's a bear market rally. But what they have to think is it's all about time frames. People, they have to agree on time frames, because I'll show you this. This is a rising trend. So any pullback towards this line here, or the 9-year moving average, or this pivot line, could be seen as bull market corrections. Because even over time, if I do it like this and I put a line chart here, you see over years, this is a bull run that's been running for practically since the crash, since the depression of 2030. Silver has been in a bull run for 80, 90 years. So it's all about time frame. If somebody's looking super shorter term and he's looking at just here, remove drawings, then he could say that this was a bear market, and then it's just a rally upwards, and that thing should plummet down. So the people who think this is a bear market rally, that's what they're seeing. But if somebody's zooming out and looks at the bigger time frame, like I just showed you, even here from the 2000s, that's so. It's in essence, they're both correct. That's why it was a trick question. It's all a question of time frame. Are you looking at this as the start of the bear market, and then this move up was just a rally, and then it goes back down and it continues downwards? Look, and this is what I'll tell you. This, you see, this is the downwards channel. That's why, guys, breakout lines are critical. That's why you need to respect the chart until this line here, the 28 or the 29, like I showed you, is broken on the other chart. That scenario is still probable. Maybe we're 20%, this up. Maybe now, because we're close to that breakout line, and because the SPX broke out versus PPI and all that stuff I mentioned to you, this is probably an 80% type of scenario. But chart patterns are only those chart patterns once they complete. Until then, imagine if we're both wrong. Imagine if it just goes sideways for more time. Like you'll get whipsawed, you know? So I'd be bearish if this line is breached below. I'd be bearish. And I'm super bullish if this one closes above, we close above that. But since we're super close to it, of course, I'm going to put there's no reason to be scared of this line here. I'm farther away from it than I am to this one, right? So always look for this. And if ever that one fails, then of course, we're going to start looking at this one to see if it fails. And if it doesn't fail, then it's just the market that needs more time to consolidate. So there's no clear signal to go long silver, guys, at all. There's no clear signals to go short silver. If you're playing the probabilities, then you need to let this play out, wait for the quarterly close, wait for gold to break out versus SPX, which is not done yet. It's like you're super close. It's like, why pull the trigger now? You're super close to getting that confirmation.
Before we have a look at the gold versus SPX, which would be a great one to have a look at, that silver chart is very clear, and that $28 line, that point is very, very clear as well. Are we as clear when we look at the gold chart?
Yes, it's pretty clear. I'll share my screen again. You'll see the gold chart. I'll just pop up to gold. I see, yeah, I have a whole bunch of lines already on that. Set view. Gold chart, look at that. So a valid breakout line needs 3 bounces on it to be morph into existence. So here's the first one. Here's the second one. Right now, we're reacting to this line. If ever I don't want it just to bust above. I want it to do maybe a little reaction, a little red candle to tell me, okay, that line exists, it's resistance, it's meaningful. And then this breakout, honestly, a candle above for gold, a monthly candle above 1935, but a convincing one. So a 1960 candle close, just like here, like June of 2019. In hindsight, you look at that candle, that's a bet everything you have on that candle. It's a high probability, an 8-year pattern. Nobody cares about gold. It breaks out this convincingly. You see how it didn't leave any doubt, right? It's a huge, it's like when you do a race, a 100-meter race, you don't want to win by inches. Like you want to tell the other guy, look, I'm going to be the best guy for the next 10 years. I'm that good. I'm Usain Bolt, you know? You need a huge close like that. So if ever gold does some type of crazy close like that above this line, it closes above. And at the same time, it's able to close above this horizontal breakout line, just like it did here in June of, see here, there was a slanted breakout line. It closed above that and the horizontal breakout line. It consolidated for what, 2 years, 3 years? By the time we get this candle, it might be, that was 2020. It could be 3 years by the time this thing breaks out. And you're not going to get those signals often, guys. You're just not. And then for your neck of the woods, gold in GPD is already breaking out, right? I'll show you that one if you don't mind. I know you're not in England. Look at that. This is gold expressed in British pounds. Like a
lot of our viewers and a lot of our clients are based in the UK, so this is key for them.
It's breaking out. It is breaking out. There's no doubt. If we close the next 2 weeks above that line here, there's no doubt that gold has broken out versus the British pound. And you'll see that it'll break before. You see, gold and US dollars broke out in June of 2019. Great British pound, gold expressing Great British pound broke out in May of 2019 on this candle. So it's front leading. It's a question of time, guys.
And what's that chart look like in euros? Gold against euros. Have you got that?
Yes. I have everything for you. I should say that, right?
Indeed.
Right. Well, here it is. So it did.
So we've had a break of that and a retest of that, didn't we?
Yeah. So it's been more and more violent. So it's breaking out. And then after that, here's the final breakout line. So super bullish, right? It's bounce on support. It's confirmed that it's what I call a wall resistance. Once you break out above, it's support. You retest it. Once you retest it and you bounce off it, that's it. People have decided that the market does not want to go below that. So it's creating higher lows, higher lows, higher lows. You're in an uptrend.
So we've seen gold breaking out against a lot of the minor currencies, a lot of the emerging markets currencies. We're also seeing it breaking out against most of the major currencies, sterling, euro. What we're waiting on is that kind of confirmation, which is the breakout against US dollars. And you're saying that a strong monthly close above 1935 is a very, very strong signal that breakout has happened. When it comes to, you talked there about gold breaking out against the S&P. Sure. Our viewers be really interested to have a look at that chart.
Yeah, there should be no doubt when we see the breakout, guys. There will be no doubt that there's a breakout happening. It's like you'll know when it happens. It's like when you meet the girl of your dreams, right? And your heart races and you have the butterflies. You knew, right? When you met your wife, you know, right?
Yeah.
It's gonna be the same. It's gonna be the same feeling. And what's gonna be good is if people are talking about deflation. If I hear people saying inflation is dead, I'm gonna get even more bullish. That's what I want to hear. So here it is. It's SPX. It's gold versus SPX. Capital flows leaving US equities, or at least if they re-enter the capital flows, they're entering more in gold. Because I could overlay any mining charts and it's gonna look like that, you know.
That looks like it's very close to breaking out there, though, Patrick, doesn't it?
Here, this line here, .476, a convincing close above that. Here's my descending trend line. I'll put the line chart just on the monthly. It's really close, like.
Yeah, you just want a little bit of a strong confirmation breakout on that, don't you?
There's always more resistance, you know, walls here. There's going to be another resistance. So what's going to happen now is going to have reverse symmetry moves. The angle of this thing going down, angle thick, at 57-degree angle, if ever we close above 57 here, So whenever we close, this is a sliding scale target.
Mm.
So whenever we close above, we're going to have a fast move up, go the same direction, that one. And once we close above this line, then yeah, you guessed it, we're going to have this type of move here. So it's pretty easy. These reverse symmetry moves that happen all over, the angle reproduces. It's just people get greedy or they're not patient enough, wait for the close above the horizontal line. And once this line is closed above, that's when you're going to make a huge amount of money. That's when you're going to minimize opportunity cost, because instead of getting trapped and believing in the fundamental story of whatever, why you think it's going to go up, just wait for the market to tell you, I'm ready. The sellers now, they're backing away. There's more buyers. You know, just use the charts to your advantage. Wait for this line to break, then.
And that point on the chart, where is that? Is that a 0.5 roughly, is it?
Yes. So
Okay.
here, about 0.5, a close at 0.5 is going to be great. And after that, 2/3. So a close above, when the gold is worth 2/3 of the SPX, it's going to be everything's going to fly. Everything is going to fly for a few years, maybe more. You know, it's going to be total craziness when that happens. It's like I'm going to take an airplane, go see you in Ireland. We're going to have a party at Guinness. You know, it's going to be great.
I'm on for that.